Okay, guys, let's finish up this series here with a look at a different bar type. This is a 40 range. This is what I tend to use most often, but that's purely because I tend to trade this with the auto trader, which it's not, you don't have to have it, right? It's a luxury. And indeed, I'm going to show you how you set up a few things here to get close to it outside of the auto trader actually entering the market for you, but certainly could draw your attention to the same kind of things the auto trader would be identifying. So I went back to Thursday here for a couple of reasons. One, I wanted to show you one of the downsides to working with a range bar if you have a highly volatile day, as we did. It was somewhat unusual on Thursday how many times we had extreme volatility. But let's just start at the beginning here. We looked at the swing retrace, right? And then we go up here and we at the time, that's the high of the day here. Now, the things that are important to me, and I'm just going to kind of go through them with you. And again, it's not like this is the right way, the best way. This is just how I do it. So I do keep all the bar markers are all turned on. Bar stats, you've seen it, just a couple that I use. I like delta and the percentage change in volume from bar to bar. I keep the ratio on as well, and when it's bright, I pay attention to it. Now, this is my tick aggregation. I keep it at 4. Same thing with the 40 range. Now, when we get into this is, again, as I was saying earlier, this is the meat of the product, I think, right, in terms of not only what you're looking for, but also how you can emphasize these points. And you'll see I've got stripes going all over the place. So what I'm doing is here, I like to pay close attention to value areas and where the POCs are in the candles. So thus, what I'm doing here is I'm highlighting bull and bear POCs, and then particularly if I have a POC in the wick, or if I just want to extend a POC because I know there's trading volume there. So looking in that candle, that's where most of the volume was traded. It may or may not be support or resistance, but it could be, right? So as I'm looking here, could this have been some support for a swing retrace and then we head back up again? Well, it could have been, right? But in this case, they blow right through it. And now I'm tracking the bearish POCs here for potential resistance if we come back up to it. There are a number of things here that you'll see here within these bar markers here that are, again, the kind of thing that you would, it might be something that you code into the auto trader. It might be something that you're just setting at an alert to go off. You'll note here at some of these pivots here, you see the little snowflake up here. Well, that's fading momentum. So if I'm looking up here, now, am I going to sell this right off the bat just because I see fading momentum here? Probably not, right? I mean, the day's just getting started. But a swing, a retrace, now I've got fading momentum down here again. And it's the kind of thing, so in addition to fading momentum, I've got an exhaustion print at the low. I get a bullish POC, but the POC's in the wick. That's why it's extended. We'll look at that in a second. I've got a positive candle here, but I've got negative delta. Right? Delta's 95. The ratio is not giving me any particular edge here. So we start to climb, right? And we're just clearing through the POCs in these down candles here as we push up, pushing higher. And there's little bar markers here. I won't go through all of them here. You see an inverse imbalance here. Here's the POC being pushed across. Here's an exhaustion print at the low here. You see a little thin print here, a little sweep where we have a couple of zeros here, and then a pretty big imbalance right there, but 344 to 38. Here's the POC. Here's a neutral POC that has a big sweep in it, but a stacked imbalance here. Could be a limit order. It's hard to tell. That's a pretty good amount of volume. That could be a sell order. It's hard to tell. We never know for sure, but you have to make a reasonable deduction given that size, and there's nothing on the other side of it that could have been a sell order there, a limit order. They appear the same way. Then we're back up here. I've got exhaustion prints. I'm getting bar markers here. Then I've got I've got trap traders up here. So as we're flatlining here, and these are moving here. I put this down here to draw your attention to these. 17 seconds, 20 seconds, 17, 11, 3, 3, 3. I mean, this is all happening much faster. That's the trade-off with the 40 range. This is going to be happening fast. So as I was saying earlier, so much of what we're doing here is designed to make it so that you can catch this. You can see enough information to make a decision at a glance. You're no way you're going through and thinking, oh, 228 to 56. Oh man, it looks like that's an imbalance. We're down here by the time you thought that. So it has to be something you can see at a glance. So quickly here, I can see the delta. I can see the percentage of volume relative to the prior candle, and I've got trap traders up here. And then I've got I've got a couple of things here. I've got an imbalance here. I've got a bearish POC. I've got mild delta here at that moment in time. That would have been the high of the day. And now we start to head down. Now what I want to see for confirmation as we're heading down, I want to see those exhaustion prints. Where's the POC? Well, we're about in the middle of the candle. We're starting to look, delta, look, bright pink here. It kind of drawing your eye to the fact that, hey, this is a pretty good push up to the double top here, and now we're falling pretty hard. Now, as we go down, I want to see these exhaustion prints because the temptation is, I've made a little money here. Let's just get out as we get to the 22, or as we get to the 21 EMA. Okay, maybe I just want to get out, but there's nothing screaming at me, time to get out. If anything, it's saying stay in. Now, this is where it gets a little very funky, and this is just, there's no way around this, right? This is not our software. No software could track this. Look at the length of the bar duration here. I've just added this here so you could see it. These are all less than a second, right? This all happens within maybe a second. There's no possible way for any software to track that. It's just happening too fast, right? And it happens. It's not an everyday thing that you would see this, but again, there was a lot of volatility and Trump speaking and the Fed speaking, a lot of things going on that day. So you saw it repeatedly throughout the course of the day. If I get to this is happening, I just get out. I can't see what's happening. I don't know what's going on. I don't know where that's going. I'm just out. Win, lose, it doesn't matter. I'm out. Again, we see it again a little bit later in the day, which we'll get to that. Down we go here. That's the low at that time. That ends up being the IB, as I recall. That ends up being the IB, but it's not green yet, so it's not 10:30 yet, and we see the time. Up we go here. Now, is this a potential pivot? I wouldn't even consider turning the auto trader on or taking a short here without first coming over here to look, where am I over here? Right, coming full circle to where we were. I only turn the auto trader on based on something I see over here. I don't come over here and go, time to turn the auto trader on. I'm starting here. Do I think I'm at an area that would make sense for me to want to dig a little deeper into it? Do I anticipate a pivot? Can I get an edge here that I couldn't get in a 4181 tick chart? I'm going to see wick. I'm going to see but I'm certainly not going to. These candles aren't going to. You're not going to get. Well, I shouldn't say. It would be unusual to get a less than a second candle here with a 4181 tick, right? Crazy shit can happen. But I've got more time over here. So I'm coming here because I'm looking for an edge at a potential pivot or an area where I might want to consider entering based off of something I'm seeing here. Maybe it's the potential order flow that's there. Again, it doesn't matter why. It's just you're making that distinction here. Maybe it's the pivot here. We've had a measured move hitting its target. Well, now I'm coming over here. Do I want to turn the auto trader on for a potential long, if that's my bias at that moment in time? And that's I circle back to this because I think just to I know I'm repeating myself here, but that's the most common mistake people make with a footprint chart when they're getting started with it. They're making all their decisions here. That's not enough, right? Because again, you could talk yourself into a trade on every candle. I got a big stacked imbalance. I better buy it. I got a big sell imbalance here. I better sell it. It's incomplete, right? It's designed to give you an edge at that point of area of interest. Now, okay, but maybe I'm at a golden zone or a 50% or prior resistance here. No, wait, I got negative delta here. I got an exhaustion print. I've got a bearish POC. I mean, all of those kind of things. Then potentially, right now, I want to consider: do I want to turn on the auto trader for a potential short? Perhaps, right? Reversion to the 21, maybe. We had this several times throughout the course of the day. Here it was as we were hitting the what ends up being, that was the open, but also I think close to the IB high. You see again, these are all, look, you can't track that, right? So just get out. Don't stay through that. If you see that starting to happen, right? Again, it's not our software. Nothing can track that. This is maybe 2 seconds, right? All of this is happening. Right? It's just a lot of bars within a few seconds, and then finally we get down here. This candle takes 2 seconds to form, right? So they're trying to catch up here. Okay, so we up at the top here. Well, what have I got here? I got trap traders. I've got delta divergence. Okay, if we're going to launch here, that's not what you would anticipate seeing at a launch point. That's what you'd anticipate seeing at a pivot point. Looks like we're out of steam here after all of this crazy. Okay. Do I want to enter the market now? That might be a little soon here. I'm looking for some confirmation. Well, what's the kind of thing I would look for confirmation? I want to see exhaustion prints. I want to see negative delta. I don't want to see it bounce at the 21. I want to see it get under. Ideally, what's the perfect scenario? At least for me, I'd want to see it come down and then come back. and not do this, right? And struggle to get on the other side of it. That's what I would look for. Again, it's just me. Swing up, can't close it. There's a POC in the wick, right? Well, let me go through these here. I know I'm bouncing around again. Okay, so if I go through some of these things here, so absorption, I keep that. There's no reason for some of these to not be kept on for maybe a mark of a bar or two. Now, AB, you're going to get, I think there are some in here. When I switch to a 40 range, I think there's some absorption. So you get a big fat AB, big delta. We'll look at that in a second. You get a big fat BD. You're not going to miss it. Delta divergence, that's just a dot, right? That's very, very common. You see that all throughout the course of the day. You're going to see delta divergence. No reason to not turn it on. Exhaustion prints, I absolutely want that turned on. And I want to extend it for a couple of, here's one right here. I want to extend it for a couple of bars just so again, at a glance, I can see what's happened there. Fading momentum, yeah, I'm going to get a little snowflake when I see that. We saw some earlier. So why would I not turn that on? Extend it for a couple of bars. Fat prints, same thing, right? This I don't turn it on, right? So if I get a big print with that kind of volume, okay, great. Imbalances, definitely, I turn all of these on, except for this, which we looked at before, because again, that's more of an educational exercise. So I wouldn't use that on while live trading, but there's no reason not have all of these on. No, I shouldn't say that. In my opinion, right, there's value in having these on. Imbalance reversal, that's one I focus on, as well as a reverse imbalance. So all of the imbalance reversal here, I want that on, and I want to extend that until it's tested. Inverse imbalance, same thing. This one, I want it on, but I want to extend it for five bars so I don't mix the two up. So one is going to be a longer extension. The other one here is just going to be for 5 bars. So I can make that little distinction in my mind. I can change the colors, but then I'm going to know where is it in the candle, right? So you see one right here. Market sweeps, that's going to be pretty obvious, right? This would be a market sweep. It's again, no harm in turning them on. The POCs, this is where I turn everything on except for the additional POCs, right? That's information overload to me. I want to fill it. I want the POC gaps. I want to see POCs in the wick. I want to show bullish or bearish. Again, this is my preference. That's what I turn on. And then what do I want to extend? I want to see POCs in the wicks. Here, POC in the wick. I want to extend that. Because that's telling me, or likely, I've got traders that perhaps, or maybe I may end up with some support or resistance based off of that. I may not, right? But at least I'm going to extend it over here. Oh, I can't remember here if that actually comes into play, but it can. Just telling me, right, I've got a lot of trading that took place there. The market moved away from them pretty quickly. Are they on the right side, wrong side? Well, you could take a little read in there. But again, while the market's trading, you don't have time to look at that and go, oh, shoot, when are they on? Well, man, that guy's on the wrong side of the market. You're not going to have that, right? So now we come down to this again. Less than a second. It's unusual, but there it is. You can't hold through that. You don't know what's going to come out on the other side, right? So you better to just get out of it. We get back to here. Well, there's 3 seconds. Okay, well, you can start to catch up. Here's a POC in the wick, right? Extending that over. POC, that's a bullish POC in the wick being extended over. Same thing. Here's extended and it's broken. All right, I extend till they're broken. Did this provide any resistance? Maybe. Well, here are those two from earlier in the day, right? We were looking at that. Okay, they struggled to get through it. Here we go, right? POC in the wick, extended. POC in the wick, extended. A reverse imbalance, right? You can see them right here. They're caught on the wrong side. Oh, somebody thought that was going down. Up we go, right? They have to cover. That's more fuel, right there. You got a big sweep here, big imbalance. The exhaustion print at the low. You got a stacked imbalance here. So this is all happening. Look, this is less than a second here. Less than a second. Well, boom, 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 boom. 6 seconds, 15 seconds, right? Just so you can see, right? And you have to experience it to appreciate how fast this can move. So thus, something like an auto trader is advantageous. Again, it's a luxury, not a necessity. How could you work around that? Well, you can do it with alerts. So you can see here, I have several of these. Again, I'm using the auto trader, so I wouldn't have these alerts going off because they'd be pinging all day. But I have, just as a potential solution for someone who doesn't have the auto trader, give me an alert when there's an inverse imbalance, when there's a reverse imbalance, when there's a second slot imbalance, when there are trapped traders. Oh, I got one too many here. When there are trapped traders. Alert me, please. Now, you may be focused over here and something that's going off over here. Well, maybe that's in sync with what you're looking at, maybe not. Again, I'm just giving you a potential scenario in a way that you could be alerted to those events without having to be glued to the footprint chart all during the trading times that you're active in the market, you might be looking at. Maybe you're looking at the ES, or maybe you're looking at gold or something. Again, at least alert me so that I know that it's happened. Just a few suggestions here. You see POCs in wicks, or bullish or bearish POCs being extended. Same kind of thing. Again, if this is a template that's of interest to you, just ping me in the Discord here. I'm happy to share it. Again, it's not that this is the greatest one of all time. It's just the one that I use. I think that covers. Did we get everything? I think we did. All right. Well, again later in the day. That's 1:30. I think that was the tariff talk. All less than a second, right? Impossible to track that. You just need to get out there. It's just the reality. Again, it's not typical to see that multiple times during a day. To see that even with a 40 range, it's somewhat unusual. Okay, I think we covered everything here. It takes time to be able to see this at a glance, right? So here's trap traders again. Oh, I was looking for the last one here. I'm going to show you this one here because just to circle back here. So hang on a second. Okay, this is a pretty nice example. You'll recall I was talking about earlier that the first test of the IB high or the low, there's an algo that sits there that fades it. But we are not the only ones that know that. I've been preaching this trade for 5-6 years now. But again, it's not like you would have learned it from me. Plenty of people know this. Okay, so this is a very common event that you see here. A pivot gets created here at 1025-ish, something like this. And there's delta divergence there, negative delta. So there's a classic delta divergence here. We're at the high, but we get a down candle. And then the market comes down here. Here I've got fading momentum down here in an exhaustion print. Right, all the value areas in the low of the candle. I get a bullish POC. We're right at the 21 EMA. Now here comes the launch to come back. Now once we go green, that means it's 1030. Right, so I know I've got this is the first. This is a virgin IB, right? It's being tested for the first time. And this is something that you'll see very consistently when they being, whales, institutions, algos, fill in your own they. When the intention is to break the IB because they know there's an algo there that will fade it. If they're going to break it, they've got to do it with big volume and muscle. So look what happens here. We first approach it here. We get a ping through, but then in the next bar, look at that big fat BD right there. What is that telling you? That is big delta, right? So because they're breaking the algo. So you can see it down below. We go to a bright hard blue here, 1235. I mean, you've got an aggressive POC here. Look at the delta here. It's 290 to 50, and then 918 to 199. That's big delta, right? That's a big buy order. It's coming through there to break the algo, and of course it doesn't even pause, right? And then we get here. There's just a complete sweep, right? So this again, look here, 1235, 1245. This is a big push, right? I mean, that's a trade you want, right? That's not a time to be thinking, oh, should I short this one? Definitely not, right? But it's not like there wasn't evidence here to suggest not the day to take that short. Because it doesn't work every day, because there are trending days, right? That's the point of breaking the IB. That will attract the higher time frame traders. Perhaps we got a trending day. It wasn't the greatest trending day on Thursday, but we had off the initial push lower here. It ended up being a pretty decent day. I think it was an easier day to trade than Tuesday, Wednesday, which were a bit choppy. But again, you had the Fed speak and all this tariff drama. I think that probably covers us here. Then you see as we roll over here again, note how it's in sync with the 21, right? As we start to roll over here and we seeing now we've gone to this negative delta, hard red, big negative delta here. Look how we stay in line with the 21, a little bounce back to it. Here we get to, this is the area you want to be very careful about trying to trade here as you're riding the rail of the IB, but eventually we break, right? So this is, we're now like hard red on the EMA, exhaustion prints, negative delta, trap traders here, right? We got trap traders up at the top, right? They're in trouble. Here's an exhaustion print. That's just what I want to see for continuation. This allows you to have some conviction and some confidence to stay with the trade. Oh, okay, because it's going to move right within that period of time. Well, this is. Look at the difference here. This is a minute 19 to 57 to 37, right? They're getting quicker down here, right? The bars are happening faster. Double bounce here. Where are we bouncing, right? You know that's a POC from prior volume in a candle earlier in the day, right? There's an example where perhaps that's part of the support here. We're right at the open. I know from that gold line. What are we doing? We've gone below the 21, and now we're coming back to it. Back up to the IB. Can we break it here? We're gonna have a trend day? Oh, sorry. Not yet. What happens, right? It's not this candle. It's this candle. Oh, wow. Whoa. It's not the greatest sell-off here. Depending on your size, right? We're on 40. These are $20 a candle, right? So, okay, if you're 2, 3 lot, 5 lot, you probably made a little money there, but okay, now we're coming back the other direction. Look at the value areas. Look at the POCs. Oh, all of a sudden now 21 EMA has gone green. What do? We double. We double at the IB. Right, that's it's just so very common. So something to pay attention to. Now, back down here, now here the inverse imbalances at the low. That tells me potentially you've got trapped traders they're going to have to cover. Again, they're trying to get it rolling, and then we go into another one of again, this is really unusual to have that many times a day. So this was the tariff talk, right? I think they're interviewing Trump, and we've got the tariff talks. What do we see at a low here, right? There's fading momentum down. Oh, momentum is not trading. And then I get an exhaustion print. Here's bullish POCs. Again, it talks to you throughout the course of the day, but it happens very fast. It takes time to develop the speed with which you can read this. There's trapped traders up at the top, right? Bearish POC, down we come. Okay, that's probably enough, right? Again, anyone who's interested in this template, happy to share it with you. It's just my template. It's not the world's greatest template. It's just, you can see the benefits of it. Hopefully that's logical. It makes sense as to why I do these things. With that, okay, I'm going to wrap up. I'm going to end this series, and we'll transition to the second part of this whole series, of the Getting Started series. We'll be diving into the auto trader. Okay, until then, we'll see you next time.